Hi everybody, welcome to our group presentation on Japan asset bubble and 2008 credit crisis. Our group members consist of Deng Yanwei, Li Jiayi, Liu Xili, Qu Xin, and Yu Shaoang. Today we'll strive to give you some insights on the two crises as well as their connections with each other. On our agenda, we will first analyze the background and causes of the two crises, followed by their similarities, and then we compare the consequences to find out more similarities and consequences before we arrive to the conclusion of the whole presentation. Let me first give you an introduction on the background of Japan asset bubble by this timeline. The rise in asset prices stretching from 1982, accelerating in 1985, and before the official onset in 1987. And after the peak in 1989 in the stock market, the bubble burst and plunged the whole economy into prolonged recession until today. Another illustration would be the Nikkei 225 index. The peak almost reached 40,000 and then left only with 1/3 after the bubble burst nowadays. Now it comes to the causes of the Japan asset bubble. And we mainly focus on two factors, the protracted monetary easing as well as the deregulation in financial market. The combination of these two boosts the overall confidence in Japan, and which give rise to the bubble economy in the 1980s. I will first start with the deregulation in financial markets. In terms of contents, there are 4 ways for the deregulation to inflate the bubbles. Firstly, non-banks, such as housing loans company, entered into the lending business and intensified the competition with banks. The second component is the interest rate liberalization. The higher interest rate shrank the profit margin of banks. In response, banks broadened their business scope and extended more credits to riskier and smaller clients, such as companies in real estate industry. Meanwhile, the integration of the domestic and global financial market gives Japanese banks and companies more choices to respond. In the big picture, there are 4 key steps in the process of deregulation. It opened up more domestic and foreign funding resources. Therefore, Japanese companies gradually gained independence from bank loans and turned to bond financing and equity issues. Therefore, the Japanese banks lost many of their big clients and faced the threat of declining profitability. This induced more aggressive bank behaviors and exposed them to higher risks concerned with default. Next, Shawn will give us more details on monetary policy.
Thank you. The second factor that resulted in Japan's bubble economy is the protracted monetary easing. According to the specific measures adopted by the Bank of Japan, we can divide this period into 3 sub-periods. The first period is from September 1985 to the summer of 1987. As you can see from this picture, the discount rate was cut 5 times, all the way down to 2.5%, which is the lowest in history. And this flat line refers to the second period in which the low discount rate was sustained for another 2 years, and the rise of the discount rate refers to the third period. Now I will talk about the mechanisms beneath the policy that resulted in the bubble economy. As the effect of the low market interest rate back then, speculation became very attractive to investors because on one hand, they can get cheap funding, on the other hand, they can speculate on the rising asset market to make huge profit. In addition, due to the prosperity of the stock market, firms tended to issue stock for financing. So banks had to expand their business scope to riskier industries such as real estate. Thirdly, with the increase in land price, the value of the collateral a firm could provide increased. So the firm borrowed more money, but they didn't use the money for operational use. Instead, they invested the money on the asset market to speculate. This further enlarged the bubble. Now the only problem left is why the Bank of Japan didn't use monetary tightening policy earlier. We summarized the 3 reasons. Firstly, the inflation rate back then was fairly low, and since Japan performed very well after the Black Monday stock crash, so it's pretty hard to convince the public of using this policy. Also, the US government opposed to this idea because they were worried about the stability of the US stock market. with a series of promising economic indicators, as you can see from this picture, people became more confident on Japan, and this confidence in turn made the stock market and the real estate market bullish, and this bullish market in turn further strengthened people's confidence. So you can see this multiplier effect eventually resulted in the overconfidence in Japan. Now I will invite Julia to introduce the causes of the US financial crisis.
Okay, thanks, Shawn. From 2000 to 2003, the Federal Reserve actually lowered the federal fund rate target from 6.5% to 1%. The lower interest rate encouraged borrowing and create a very easy condition in the credit condition in the United States. The easy availability of credit in the U.S. and the fueled by the large inflows of the foreign capitals after the Asian financial crisis actually led to the housing construction boom and the facilitated debt financing consumer spending. And together with the next spending lending standards and the increase of the mortgage-backed securities and the collateralized debt obligations and the rising of the housing prices, all contributed to the accumulation of the housing bubble. As you can see from the chart, the U.S. housing prices actually increased intensively, especially from 2000, and reached a peak in around 2006. When the Federal Reserve started to increase the interest rate to address the inflationary concern of the economy, the subprime mortgage borrowers were actually having difficulties in meeting their obligations, and therefore the default rate actually increased. At the same time, the new purchases stopped entering the market, and therefore the real estate housing prices actually dropped very sharply, and finally leading to the burst of the real estate bubble. The disaster in the real estate market spread rapidly over to the whole financial industry and into the real economy to an unimaginable level. And the causes are multiple. Firstly, is the proliferation of securitized subprime mortgage is mainly responsible for the occurrence of the crisis. As you can see from the chart, after the securitization process, the banks actually took the profit and the start of the transaction without worrying about the repayment ability of the borrowers. And the higher the volumes of the transactions, the higher the profit they gained. Therefore, they have the incentive to max the lending standards and to lend aggressively to the borrowers. And the portion of the household mortgage divided by GDP, therefore, increased very extensively in the from 2000. And also, secondly, the complexity of the financial instruments and misguided ratings, which led to the mispricing of the financial products, also contribute to the occurrence of the crisis. And as importantly, the financial deregulation also stimulated the occurrence of the crisis. For example, in 2004, the SEC loosened the capital requirements for investment banks. As a result, the investment banks can actually increase their financial leverage and to stimulate the issuance of the mortgage-backed securities. The gross leverage ratio for some giant banks such as Merrill Lynch and Lehman Brothers even exceeded 13.1, which means the financial industry is highly leveraged. And all the continuing financial deregulations actually increase the financial leverage for the whole industry and expose the industry to greater risks. And as importantly, the over-optimism about the prospects of the property market also contributing to the occurrence of the crisis. Regarding the similarities of the causes of the two crises, people's overconfidence about the asset market is definitely the common reason for the two crises. People holding the unrealistic perception that the real estate price would increase continuously forever. And financial deregulation and the aggressive and risk-taking behaviors of the financial institutions were also the common reason for the two crises. And now I'll hand over to Shelly to talk about the consequences of Japan bubble.
Thank you, Julia. Well, in the following, we'll discuss the consequences of the Japan asset bubble. We categorize the impacts onto three categories. The first would be on the Japanese macroeconomy, Japanese corporations, and also consumers and households. Let's first take a look at the impacts on macroeconomy. This is a graph showing us the real GDP growth rate since 1980 to 2011 in Japan. We noticed that started in the burst of the bubble here in 1991. The real GDP growth rate has been undergoing a very stagnant growth, below 2%, and even between financial crisis, Asian financial crisis, and also the credit crisis in 2008, the real GDP growth of Japan is negative. In terms of the labor markets, the bubble crisis in Japan also worsened the unemployment rate. Starting in the burst of the bubble in 1991, the unemployment rate started to climb up significantly, and also started in 2003. Although it started to decline a little bit, it is still higher than the level before the crisis. And here is the graph showing us the loss of the real estate prices as well as the stock indices in Japan. However, when the Japanese government and central bank has brought expansionary monetary and fiscal policies to stimulate the economy, it seems that these policies did not work very effective to stimulate the economy. And Paul Krugman stated that Japan's economy was actually in a liquidity trap in which nominal interest rate is almost zero, and therefore expansionary monetary policies are no longer effective in stimulating the output of the economy. And this is a comparison graph of the stock index of the other Western advanced economies as well as the Japan Nikkei average. In terms of the impacts on the corporations in Japan, the first would be the accumulation of non-performing loans faced by financial institutions and banks. And the second is faced by these losses of direct write-offs of non-performing loans, the banks and financial institutions have to receive bailout from the government, and some of them become the zombie business. And lastly, financial difficulties are also faced with domestic industrial firms because the credit availability decreases significantly. In terms of the impact on the consumers and households, generally speaking, we discover that Japanese consumers have become more frugal in their consumption decisions. Now I'll pass on to Vicky to talk about the consequences in the U.S. credit crisis.
Thank you. And we'll talk about the consequence of U.S. credit crisis. We will focus on its impact on three major aspects: the U.S. economy, American household, and the global economy. As analyzed before, the housing bubble is the immediate trigger of the crisis. So let's start with review the housing market. After the boom turned to bust, the house price decreased sharply by 1/4 in 2 years' time. But the impact on the stock market is even more serious. By the end of 2008, the stock returns were down by 37% since the beginning of the year. The dropping value of people's wealth affected the default rate and the foreclosure rate. From the graph, we can see that prior to 2006, the default rate fluctuated and then increased sharply. The variation tendency of foreclosure rate is just similar. Then how the crisis affected American household, according to a survey by American Life Panel. Totally 40% people are involved in the crisis, and around 1/3 of the people reduced their spending. The unemployment rate increased sharply and approaching to 10% after the crisis began, and kept higher than the previous level. But surprisingly, the amount of debt rose by 25%. That means some people responded to the crisis by borrowing more money, though it became harder. And some other people responded by retiring later. The crisis also affected the global economy a lot. It triggered the European debt crisis and decreased the imports in Western countries, also tightened the international financial regulation. It also volatility the global economy, such as in stock prices and the exchange rate. From this graph, we can see it is obvious that the volatility rate of stock price index and the exchange rate reached the peak after the crisis began and around 2009. Then we will move on to the similarity in consequence.
Thank you, Vicky. In terms of the similarities in the consequence of the two crises, there are mainly three types: the impact on macroeconomy, on corporations, as well as some policy responses. This is the similarity map of the land price trend in the two crises. And this is the similarity trend of the stock index performance in both of the crises. we can see that there is a very high level of similarity between the two. And this is the table summarizing the similarities in terms of the policy responses. First of all, the policy rates are reducing, and also unconventional policies are brought out during the crisis. Here is the conclusion of our presentation. Well, first of all, long-term protracted monetary easing will bring out financial imbalances in the domestic economy, and these imbalances may be exacerbated by financial deregulation and liberalization. After that, if financial intermediaries are involved deeply, it is likely to trigger systemic effects. And also, with the intensified global capital flows, the current crisis is likely to generate harder impact on the global economy. And at the end of the day, after the crisis, the government still have to face their high level of sovereign debt and fiscal deficits. And that will be the end of our presentation. Thank you very much.